welcome to the Tejas Networks Q4 FY2023 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then touchtone phone. Please note, this conference is being recorded. I now hand the conference over to Mr. Bhupendra Tiwari from ICICI Securities. Thank you, and over to you, sir.
Thank you, Darwin. First of all, hello, good evening, everyone. Really sorry for the delay, but we'll just begin. So, on behalf of ICICI Securities, we welcome you to the Q4 FY23 results conference call of Tejas Networks. And from the management, we have Mr. Sanjay Nayak, who's CEO and MD, Mr. Anand Athreya, who's CEO and MD designate, Mr. Arnav Roy, who's COO and whole-time director, Mr. Venkatesh Gadiyar, who's the CFO, and Dr. Kumar N. Sivarajan, who's the CTO. So without much ado, I'll hand over to Sanjay for the opening remarks, post which we'll take up the Q&A. Over to you, Sanjay.
Thank you, Bhupendra, and welcome to Tejas Networks earnings call. Good evening, everybody. We had updated our presentation that I'm going to walk through on our website. I hope you had a chance to download that because I would be walking through that. So first of all, just a quick update I'm on the first slide in terms of the key updates for Q4. So for Q4, our net revenues was 299 crores, and for the whole year, it was 920 crores, which was an increase on 67% for the full year, and 136% on a quarter-on-quarter basis for Q4. And as we mentioned in a press release, this is the highest ever revenue that the company had. So I think we had a fairly strong. In terms of profitability, we had a loss after tax of 11 crores for the quarter and 36 crores for the whole year. I'll give a little bit of commentary about what the thought process in terms of investments and go-forward plan is a little bit later in the presentation. This is on a consolidated basis. On a standalone basis, Tejas is profitable even on the whole year basis as well. Our cash and cash equivalents at 1,360 crores, and we again have no debt. And order book at the end of Q4 is again at an all-time high of 1,934 crore rupees. In terms of key highlight of the business, on the wireline business, which is our optical products, optical transmission products that are our products, historical products, as I would say. We continue to see a very strong business momentum, a lot of new wins, which is pretty much all our order book at this point in time is of our wireline business. Recently, you would have seen an announcement that we won a pan-India router tender for around 696 crores against all the top global companies who make routing products. So I think this was a very good win for us because it gives us a lot of scale in terms of that kind of a product line as well. On the wireless business, the 4G projects, many of you are aware of the stuff that we've been working for a large project in India. We are well positioned from a preparedness angle as well as from all the technology as well as the proof of concepts and all those other things. And there was a requirement to initially ship 200 sites, which is more than 600 radios for a few cities in North India, which we successfully completed in the month of March. So that basically the way to prime up our supply chain and all the other processes and systems so that we are well geared as the volume scale up with the large order that we are expecting. From a supply chain angle, which has been a challenge for a lot of the companies around the world because of the semiconductor component shortage. Again, I had mentioned in the earlier calls earlier in the year that we were making some structural changes in terms of our internal processes and systems to basically better handle the challenges that the supply chain was presenting to us. And again, I'm saying that we made a lot of progress during the year, which resulted in 4 consecutive quarters of Q-on-Q and Y-on-Y growth. In addition, we have been doing a lot of work over the last 6 to 9 months in terms of expanding our manufacturing capacity so that we should be able to not only execute the large backlog of orders that we have, and we hope to win new orders even on optical as the year passes by, but also the large wireless order that we are expecting. So in line with that and in our own strategy still continues to be the same, which is to be having an asset-light model for manufacturing. And we have signed up 4 new EMS partners so that we have enough manufacturing capacity available. Once we are able to get the components in play, and we have again taken inventory actions to ensure that all the long lead components which are going to be required are ordered so that we can make the supplies as required by the customer in time. So overall, I would say the preparedness from a supply chain angle with respect to internal process systems, external EMS partners, and taking longer inventory actions gives us a lot of confidence that as the year progresses and as the orders start flowing in addition, we will be able to scale up and continue to make the supplies while still maintaining a basic DNA of having an asset-light model of manufacturing. From an investment perspective, we have continued to hire a lot in R&D and supply chain, and also the field support, which is going to be required for large rollouts of the things that we are looking at, and with the larger volume of business that we have. So our headcount during the financial year increased to 1,305 people, which is a 41% year-on-year growth. One other thing I wanted to highlight, which we kind of mentioned in our results, is that this is the first year in which we, as you are aware, we had a design-linked PLI incentive for which our application was approved for a total of 750 crores of investment. We had a certain commitment to invest in terms of capital investment for year one, which we have made. There's a certain minimum revenue that we are supposed to get, which we believe we have done. So we'll be looking at all of those aspects and filing for the claiming the PLI benefits, which could potentially be in the tune of 32 crores or so, which since we have not yet filed the application, we have not recognized that profit in terms of that incentive in our FY23 financials. In terms of few other things which I think are interesting and important for your company, as a company, we were given the Telecom Person of the Year award by Voice and Data magazine, which is the leading telecom journal in the country, for development and commercialization of indigenous 4G telecom stack, and this was conferred upon us along with TCS, CDOT, and BSNL. So this is again a proud moment for the country, because what Tejas has been doing in terms of building end-to-end telecom product stack, whether it's from optical to fiber access in terms of GPON and now 4G and 5G, is something that really is giving us a lot of confidence, both as a company and as a country, that we are ready to scale up, and become a global player in the telecom OEM space. We also received a few more awards in terms of most valued vendor partner from LCTA Bangalore and others. During the quarter, 18 patents were granted, so the total grant is up to 217, and between Tejas and Sankhya, we have now filed cumulatively around 445 global patents. Coming to the next slide, in terms of a few key corporate updates, starting from the first one, which I believe many of you would have read the press release towards the end of March. I had made an announcement to voluntarily step down and take retirement from the company by the next AGM. And although it might, to some of you, it might sound as a sudden decision, I just want to give you confidence that this was something that I had been planning for about a year. The whole process of what the whole objective was that we made a long-term strategic plan for the company. We made sure that what needs to be done over the next 3 to 5 years to take the company to among the top global OEMs in the world. And my objective was to make sure that before I announce my retirement and step down, the company should be in a very, very strong footing, and our foundation should be rock solid. As you can see, we had the best ever year in terms of booking, revenues, and the foundation today is ready that we can scale up on an exponential basis in terms of the revenue opportunities that are coming up. From a personal commitment, and many of you know me and have seen me operate, I've been working very intensely and with a lot of passion for 23 years, from founding the company to where it is today. And it was difficult for me to make the commitment for another 5 years and say that this is the intensity with which I can carry on. So in that sense, this was a very good time to start transitioning, and I'm very happy that the vision and the execution that we have will be continued. And that is really where the whole thought process came together. I'm also happy to introduce Anand Atreya, who is with me here, who is the CEO and MD designate, who has joined us early April. We've been working together on the transition, and he's really picking up a lot of the stuff. Anand actually comes with a very strong industry background. He was in the US for many years, and in Juniper Networks, which is one of the best companies in our industry in terms of technology. He was for 18 years Executive VP and Chief Development Officer in Juniper US. So the best part is that from Anand brings in a lot of global experience and having done things from the US side. The DNA of Tejas in terms of people like Arnav, Kumar, Gadiyar, who are all my co-founders and the rest of the team. We have a very strong DNA from how to build a company from India and get to the stage that we have. So I think it's a great combination to put together, and I feel very comfortable that going forward there will be a lot of continuity of vision and execution, and the company is in a very good hand. And probably this is a good time for me to say that yes, things are looking good. We have a lot of momentum, and the transition can be planned effectively. Maybe I'll ask Anand to say a few words from his side, because he's not been on the earnings call before. So Anand, over to you.
Thanks, Sanjay. Good evening. So I'm very excited to join Tejas. I think we are at, as Sanjay mentioned, we are at an inflection point where the company has come a long way over 23 years and with solid footing. There's a lot of growth opportunity. I'm excited to be part of that journey to ensure that we build a world-class OEM equipment company, both telecom and networking, out of India. So looking forward to working with you guys in the coming quarters and years. Thanks, Sanjay.
Thank you, Anand. A couple of other updates from a corporate angle. Ms. Alice Vaidyan, who was the earlier Managing Director of GIC of India, really has a lot of rich experience. She has joined us as an independent director post the retirement of Ambassador Leela Punappa, who retired earlier in this quarter. And also from a rating perspective, ICRA has reaffirmed our long-term and short-term rating to A+ and A1+, respectively, as on March 31st. So, and we have enough, 559 crores of banking facilities that can be made available. Going to the next slide, I'm going to request Venkatesh Gadiyar to just walk us through a couple of slides, adding comments after he gives you a brief summary of the numbers from the growth angle and so on.
Thank you, Sanjay. Good evening, everyone. We are in the slide Q4 FY23 financial update. We have been growing on the revenues consecutively for the last 4 quarters. Q4 revenues were 299 crores, a year-on-year increase of 136%. And we had a loss of EBIT loss of 43.7 crores and a PBT loss of 27 crores and a PAT loss of 11.5 crores for the quarter and EPS of minus 0.70 paisa. And for the year ended, the revenues were 919.6 crore, which we saw a growth of year-on-year growth of 67%, and EBIT loss of 108 crores, and a PBT loss of 43 crores, and PAT loss of 36 crore, and a EPS of negative 2 rupees 46 paisa. And while we are on the PAT loss for a consolidated basis, on a standalone basis, Tejas had a revenue of 869 crores and had a profit after tax of 3 crores in FY23. And the revenues of in the 919 crores of revenues for the FY23, around 50 crores the revenue came from Sankhya. Similarly, EBIT and PBT of 34 crores, which came from the loss of 34 crores, which came from the Sankhya. Similarly, PAT of 23 crores, PAT loss of 23 crores includes from Sankhya. And also the EBIT, PBT and PAT of FY23 includes the amortization cost of around 13 crores, which is as per the purchase price allocation which we have done on the acquisition of the Sankhya Labs towards the valuation of the technology assets that we have acquired.
Just one comment I wanted to add to what Venkatesh just mentioned is that on an overall year basis, and we have been communicating during the year as well, is that our gross margin as a percentage did see a dip compared to what our historical numbers were and what it was in the previous year. And the reason for that, as we had recounted earlier, was that the input cost, which is the semiconductor component cost, had increased quite significantly. And since some of our contracts were fixed price contracts, and we did not have a ability, which is what was coming out of our backlog, we did not have the ability to reprice those contracts. And hence, our margin pressure was there because our input cost had increased and the prices on the other side was fixed. The second reason, again, for a GM percentage reduction was that while on an overall basis, our international business was almost flat year on year, and as we have earlier mentioned, the margins internationally are significantly higher than the margins in India. And since the international business as a percentage of total did not increase in the same ratio that the overall business increased, that again contributed to a slightly reduction in the margins. The third point is that at the beginning of the year itself, we had made a plan that we were going to be using FY23 as a year of investment. And the sandbox we are working with is to invest as much as possible while being at least nominally profitable, so that we could actually make investment for the long-term growth, which is what we will be seeing in the coming years. And so we invested a lot more in R&D, a lot more in terms of supply chain, a lot more in terms of sales or support and all the other functions. So some of those things also came into place, and from an internal discipline perspective, we believe that we were able to accomplish those objectives. And as Venkatesh said, that on a consolidated basis, we did have losses coming from the Sankhya acquisition, and some of them are based because of non-cash charge on the account of RSUs that we granted them as a part of the merger process. So again, all I wanted to say is that there was a gross margin pressure on the optical business or the wireline business going forward. We believe that we should be able to come back to the gross margin that we used to do historically. We have done a lot of efforts within the company in terms of cost reduction and renegotiation of prices, and we made a lot of progress on that. So hence, I think going forward, we should be able to see a positive margin trend during FY24 on the optical business. I'll make a commentary about the wireless business separately.
Yeah, thank you, Sanjay. On the balance sheet front and the cash flow front, we had for a Q4 23, our cash outflow from operations was about 133 crores, and the inventories went up to 657 crores from 494 crores, as we had to secure some of the long lead components in anticipation of some expected orders that are required for a faster delivery. Hence, we have increased our inventory. And trade receivables has gone slightly up from 500 crores to 518 crores. We had collected about 287 crores during Q4. And the net working capital has been increased to 944 crores. And the cash and cash equivalent has gone up from 1,221 crores of the last quarter to 1,306 crores. And this also taken into the account where we have received the investment of rupees 300 crores from Tanaton towards the final subscription of Series B warrants during the quarter. And with this, healthy cash position of 1,306 crores, we are now confident to execute the larger order and to scale up business in going future.
Okay. Thanks, Venkatesh, for the running through the numbers. I'm again coming back to the slide FY23 sales update. This is a chart we've been using, and I'm sure some of you are familiar with this. So the chart on the left-hand side is the breakup of our business from the three categories, which is India government, India private, and international. And the chart on the right-hand side is the corresponding numbers for FY23. As you also know that we count the India private and international as a run rate business. So on an absolute basis, the run rate business, of course, has increased quite a bit. But from percentage in FY22, it was 83%, whereas in FY22, it was 83%, in FY23, it is 74%. Within the segments, India government was 26% of total and had a year-on-year growth of 158.2%. India private was 50% of the total and again had a very healthy year-on-year growth of 79.3%. International was 24% of the total and year-on-year was only 8.5%. If you recall, in the earlier conversations during the year, we had also mentioned that international business for the year will be soft. The reason for that was twofold. Number one was there was intense focus from a delivery and execution angle and many other things within the stuff that we are seeing within India, because there's a very large set of opportunities opening up. And the second challenge for us is that when we win new customers internationally, they had expectations in terms of shorter delivery times. And given the inventory situation, we were not in a position to be able to commit that. So winning customers and not being able to deliver would not have been a good strategy. So hence, I think consciously we had a little bit of a diluted focus internationally. And I'll, of course, talk about what the game plan for FY24 is. So net, overall business grew healthily. Each segment grew decent. At the end of the year, we have a 1934 crore of backlog, out of which India is 1734 crores and international is around 200 crores. From the backlog that we have, we believe around 70% of the backlog would be executable for FY24. And again, just to clarify, this backlog does not contain any of the larger wireless deals or 4G deals that we are currently working on. In terms of go forward, how should we look at FY24? We will continue to see very large growth opportunities in India, both with our optical products as well as the 4G and 5G products. This will give us two benefits. It will really help us expand our business volumes. So we'll finally be getting economies of scale, which are of the global size. And second benefit will be that in the wireless area, where we haven't had large footprints anywhere in the world, this gives us an opportunity to have a large anchor customer around which I think the kind of interest which we are getting from other global players or global customers has been very high. So people are looking at our ability to execute this project well, which will open up a lot of doors in the Western markets that we talked about earlier. On the optical side, which are, I would say, reasonably mature products, we will increase our international focus this year, and we believe with the supply chain situation getting better than what it was last year, we do expect that on an absolute basis, international revenues for the wireline business will grow quite healthily in FY24, which again, will be good. But on an overall percentage of business, assuming that the India business will be growing much, much faster, the percentage of international as a percentage of total will be lower, while on the absolute basis it will be higher. A little bit on the gross margin commentary for what we expect next year. So I would say that on a percentage basis, the gross margin next year would continue to be lower than our average in the many past years. Optical or the wireline margin will be almost back to what it was before. Wireless margin for the initial period of time, because we are going from low volumes to high volumes in the first year, we would see that margin will be reasonable but not very high. So on an overall basis, the percentage GM will be lower, but that will be more than compensated by the much higher volume of business that we expect in FY24. So which will again result in improvement in both EBITDA as well as PAT from the current year to the next year level in a meaningful way. Going to the next slide, this is again almost the same slide that you've seen in the past in terms of our product portfolio, where we have a very, very rich portfolio of products from optical transmission to FTTX, which is GPON and broadband access, and now we have of course got the 4G and 5G base stations. So one other thing which I just wanted to call out, which you would have seen the center piece of the whole thing, center set of products, is that the carrier we were shipping in large scale is something that we have started to do quite well. So this opens up another front for us in terms of being able to address slightly higher percentage of the capex, which is the transport capex, whether it is in terms of optical transport or packet routing for the service provider market, that we should be able to get. And the BSNL deal that we had announced essentially gives us that good scale in terms of taking the product not just for one customer but to many, many customers in a larger volume. I would not go into the details of that, but just the comprehensiveness of our product portfolio gives us confidence that many of these products are now reaching a maturity which are of global quality, global scale in terms of technology, and now we're going to start taking those products, the optical and the wireline products, for global markets, while the wireless product for this fiscal year will be focused more on the Indian side, and then once we reach maturity, we'll start engaging with customers later part of this fiscal year to be able to create a larger revenue and pipeline for next fiscal year. Coming back to my last slide, after which we'll of course open it up for question and answers, which is the key takeaway slide. I'm sure there's a lot of information we've passed, but if I were to kind of quickly summarize, we really closed FY23 with the highest ever revenues and highest ever order book and bookings, with 4 quarters of consecutive growth in terms of Q-on-Q and Y-on-Y. So the supply chain management issues, while I would not say are 100% behind us, but are under reasonable amount of control, there are still odd components which have long lead problems, which we are continuing to monitor. But what directionally is very clear is that as the year progresses, the supply chain issues will be behind us, and it will boil down to our ability to win a lot of business and then execute it well. With a healthy order book of 1934 crores and the good visibility of new order pipeline, both in wireless, which will be of large size, and optical, we expect to significantly accelerate our revenue growth in FY24 and beyond. We have scaled up our manufacturing capacity and are well geared to execute large orders. So I don't think that's going to be an issue as long as we are able to get the orders and we are able to secure the components for which we have taken action. The manufacturing in and at quality and scale is not going to be a challenge. And we are a technology-driven company. We always want to be ahead of the curve. We have in the traditional wireline products, we are state of the art in almost everything that we do. In the wireless products, we've been catching up very, very fast, and we want to make sure that in a short period of time, that is another area where we step up to the plate. And correspondingly, we have to increase our investments in R&D, supply chain, field support, and so on and so forth, basically to ensure that all the plans that we have are executed well. And as Venkatesh mentioned, from a cash position, we have a healthy cash position. We have looked at the cash flow planning for executing larger orders, talked to the suppliers in terms of the right kind of payment terms and so on. And we are confident that without stressing our working capital in any undue way, we have the ability and wherewithal to execute and scale up the company to quite a large size business. And that something gives us a good amount of confidence in terms of the strength and the foundation that we have and the exciting future that lies ahead of us. That's really where I would stop, and we will then maybe take questions, and if you can also address whom the question is for, we'll direct it to the right person. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vimal Gohil from Alchemy Capital Management Private Limited. Please go ahead.
Thank you for the opportunity. Firstly, sir, thank you so much and best wishes for all your future endeavors. It has been a pleasure interacting with you. And just take this opportunity to welcome Mr. Anand Atreya and also wishing him all the very best for your new role. So my first question was on margins. You said that the gross margins for FY24 would be lower as compared to what we have achieved for FY23. But on the operating side, with all the investments that we have made for FY23, would you expect some kind of operating, because we are also expecting very, very large ramp up in revenues. So do you expect some of the gross margin pressure to be offset in operating margins? And separately, what is the steady state margin after all the challenges in the wireless segment that you're seeing? After all the challenges are met with, what is the steady state margin that you see, gross margin do you see in the longer run for the business? Thanks. I have a few follow-ups after that. Thanks.
First of all, thank you, Vimal. Thank you for your kind words and appreciate that. In terms of the basic question is that in terms of gross margin in next fiscal year compared to this fiscal year. So clearly what I said is that the volume advantage that we'll get, volume scale, will more than compensate on an EBITDA and PAT basis for the percentage reduction in gross margin. And again, if I look at the gross margin percentage that we had this year, next year, as I said, on an optical, if I were to say, what I meant is that if I look at the historical gross margins, we were at much higher level when we were doing wireline business alone, which would be probably around 18, 19, 17, 18 kind of time period that we were there. So I think at that stage, the gross margin that we had were around 38 to 40%, which is net of revenues and cost of materials and manufacturing costs. So for the optical business, which is the business that we are also scaling up quite significantly, as you would have seen this year and in the outlook for next year, we expect to reach almost similar to those levels, at least in the second half of next year, and definitely in the following financial year, in the next fiscal year, second half of this fiscal year, and in the next year. The wireless business, which is the one which is starting off, will have a relatively lower percentage of gross margins, but the volume economics will be such large that at the EBITDA level, I don't think there should be any dilution on that. So in that sense, I would say that if I were to look at the blended gross margins of the company, what it was this year, there's this year, I mean, this is the last fiscal year. There's a likely chance that this fiscal year we should be similar level, a little bit up and down. When we look at the next fiscal year, which is FY25, clearly the optical margins would already be up there in terms of what was our historical average. And on the wireline margin, we will continue to see improvements as the initial volumes get replaced by steady state larger volumes.
Right. Sir, on the revenue front, you have booked almost 2,000 crore worth of orders. Now, given the fact that the order tenure is roughly 1 year, would you expect that the company would reach a similar run rate of about 2 to 2,200 crores in the next year? Would it be a fair assessment?
So I think we should look at our business under two buckets. One is the optical and the wireline business, which is what I would say has been the product that we've been working for so many years. So the revenue this year, which is the FY23 revenue, was almost all of it was the wireline revenues, right? And the new business that we have won is again almost of the current wireline product. So that business itself is literally, if you see, growing 60% this year. Backlog is really accelerating, and we also feel that part of the business will continue to do well. And of course, there is opportunities to also scale that up on an international basis, which we did not have much traction last year. On top of this, we will have the 4G and 5G wireless business, which has not yet started to play in. And as many of you are aware, we are working on some large deals in India, which we believe are around the corner. And once they come in, that would be a completely different revenue stream and of a much larger size. So the two together, I think, give us a benefit where in the near term, the wireline business will have almost steady state gross margin level. Wireless business will give us volume, but with a slightly lower margin. The blended thing will still give us very healthy, outlook in terms of improving our EBITDA as well as profitability.
Understood. If I may, one question for Mr. Anand Ate. Sir, what really found you? What is it that attracted you towards the Indian telecom equipment industry, and how is it that you plan to differentiate Tejas Networks vis-a-vis very, very large global players which are currently operating as your peers? Thank you. That would be all from my side.
Thanks, Vimal. So I think what attracted me to Tejas has been trailblazing, for so many years. And as I said before, I think we are at an inflection point. This is India's decade, if not it's India's century. So I think there is tremendous growth opportunity to make stuff out of India, for the world. And that's what excited, me to come back, and join Tejas. I built the Juniper Network India facility to be a world-class center. So I think we can repeat a lot of that, take all the great work that Sanjay and team have done to a global level. So that's what gives me the excitement to come here.
Understood, sir. Thank you so much, and all the very best, Mansi.
Thanks, Vimal. Thank you.
Thank you. The next question is from the line of Mukul Garg from Motilal Oswal Financial Services. Please go ahead.
Yeah, thank you. First of all, Sanjay, thank you so much for your untiring, effort for last 23 years. I'll really miss our frequent chats on the telecom equipment space. And, at the same time, Anand, welcome. Congratulations, for taking over. Looking forward to interacting with you going forward and, learning a lot about how to kind of take the company forward. Two questions from my side. First question, I just want to get some sense, from either of you, in terms of the win from BSNL on the carrier router side. Sanjay, while you mentioned a lot of areas for FY24, I got a feeling that this is still, as of now, only BSNL type of thing which you guys are seeing for this year. How should we look at this, given that this will kind of open up almost a newer segment for you in terms of opportunity and replicability at more private or global level? And second question for Anand. Anand, as things stand right now, which are the key areas within Tejas which you would tap into first in terms of low-hanging fruit to change the company or take it forward, and how do you see opportunities for the company kind of develop over next 3 to 5 years? Thank you.
So let me answer the first one, and then I'll ask Anand to answer the second one. So really, if you see the one thing which has worked well for Tejas over the years, and actually for most companies of our kind in the world, no matter where you're located, is that you develop pieces of new technology or enhance your products with new capabilities, and you need to get one large anchor, kind of take your really good product which is at low volumes into a mature product which can be built at high volumes at scale, and then of course it reduces the cost. It allows you to spend more money in R&D to complete the feature set to a complete angle. So that is the recipe, if you see, we followed for many products like FTTX. Our first customer was BharatNet, and then we of course replicated that success across many others. Same thing for wireless. We believe that we'll have one large anchor customer and replicate that success once we mature and build the technology. So in that sense, clearly, when I mentioned earlier that if you look at the transport part of the business, and by the way, just to give you the sense of scale, the optical transport and FTTX together as a segment worldwide is almost the same size as 4G and 5G base station size. So I think we have products in that area which are quite mature, but the nature of what goes into transport continues to evolve. So for example, earlier it used to be, only, TDM kind of stuff, then we had packet and we have WDM, now there's packet and WDM, then there's a lot of routing technology which is coming in because what is moving around is in packet. So I think it was important for us to complement all of those technologies into our product, rather include all those technologies into our products, which we have. So in that sense, the clear the direction and the strategy is that you scale the product, you make it very, very feature rich, and not just for one customer, but for all the customers. I mean, as a product company, we definitely don't make product for one company. We kind of had already selling this in lower volumes in smaller operators, but once we've got a large size deal, it really helps us scale up and go after much, much larger customers around the world. For the second part, in terms of low-hanging fruits and stuff that Anand, you can focus on, although you've just been in the company for 3 weeks now, but take a step.
Sure. Thanks, Sanjay. So Mukul, my first focus is to ensure that we deliver on the optical business. It is very stable, and then we have enough orders to go fulfill. So ensure that supply chain and manufacturing is all aligned to deliver. That's number one. The second is to ensure that we deliver on the wireless. So there's 4G and 5G. So that's been my initial focus. Then, working with Sanjay and team here on how do we evolve strategy. So there's a lot of discussions happening. And I think it's not going to be disruptive, but it's going to be evolutionary to make this into a global, telecom and networking company.
Understood. Thanks for answering my question, and looking forward to interacting going forward. Thank you.
Absolutely, Mukul. Thank you.
Thanks for questioning.
Thank you. The next question is from the line of B. Suresh from Burams Financials. Please go ahead.
Yes, sir. Good evening, sir. Giving the opportunity. Welcome for new CEO. Sir, here? Hello?
Yeah, we can hear you well, yeah.
Sir, one question, sir. Small question. Sir, you are marketing in exhibitions conducting in USA, so Wi-Fi products, optical products, and go for another company. I see in the Twitter, Valiant Communications is a cyber security product. This product is Tejas or Valiant. How to revenue sharing that product, sir?
So by the way, so we do use some of Valiant, for example, as a partner in some of the power sector kind of a thing, where they take some of our products and complete the solution and vice versa. So in that sense, I think like we try to work with adjacent players in case a solution is required, and that's the context in which happens. But from our perspective, we don't, rebrand anybody's product. We always sell our own products. And at times, in the past as well, we have had some of the global players, take our products and, we are OEM suppliers to them.
That product sales, you get revenue, sir? Any sharing revenue?
No, I think if we sell our products, they just anybody else for that matter could just be a reseller, and so I don't think there's any revenue share perspective. I mean, we own the product we have, and sometimes it could be a reseller relationship, sometimes it could be co-selling. So that's the way usually it works out.
That company, Sankhya type of, you can in your subsidiary or not? You are not any. You are future merged with the company.
Sankhya Labs is a subsidiary of Tejas. We own around 65% of the company, and the remaining 35%. Our intent is to complete ownership of 100% of Sankhya Labs, and that would be done through a merger process which we have triggered. We expect in the next few quarters the merger process to get over. So operationally, we are working extremely closely with Sankhya already, but from a legal entity perspective, the 65% ownership will go to 100% ownership as a part of the merger process, which goes through the NCLT and all the usual approval cycles.
Any small stake in Valiant, sir? You are having? Tejas having?
No, we don't have any such stake.
In future, you can take that products in future in acquiring that brand.
Yeah, I mean, if we do anything ever, we'll definitely inform everybody. But at this stage, we are not doing anything like that. I mean, we are really focusing on developing our own products, and we have a fairly significant focus in terms of the opportunities at hand, which is what we are, laser focused to execute. So in that sense, from our perspective, we have a lot in our plate, and we need to make sure that we do a good job fulfilling that.
That products is a channel partner company. Our products actually you are any further your big orders coming.
Yes, so you can just in the spirit of other people on the call may have a question. What I request you that offline you can work through Santosh, and we can address a lot of your questions.
Okay, sir. Thank you.
Giving some opportunities to others to also ask the questions.
Okay, sir. Thank you.
Thank you.
Thank you. We have the next question from the line of Vivek Namasivayam, an individual investor. Please go ahead.
Yeah, thank you. The question is around the private, or the corporate market in India. You're making a lot of strides in the government side, but on the private, do you think there will be a similar impact on account of some of the large projects that you're working on in the private sector, and thereby see holistic growth for your company? Thank you.
Now, good question. First of all, if you see our numbers, I think the private grew quite healthily last year from around 50, almost close to 80%. So if I were to look at again, I would divide the problem into two. For the optical products and the FTTX products, we do see good momentum already in the private sector. Clearly, we can do better. I think some of the supply chain issues held us back because many of these are run rate customers, and only after you complete the previous order that you kind of get the next order. So I would say that on the existing wireline, which is optical and FTTX products, we will continue to see good traction in the private accounts in India. The wireless products, which is the new products that is coming out in terms of scale, our initial focus will be to kind of get maybe one anchor customer, but we are very confident that as the product reaches the right amount of maturity in terms of supply chain, processes, systems, technology, and so on, we will be able to have opportunities with private players in India, at least few private players in India, I wouldn't say all of them, for the wireless portion specifically, where they are closely watching what we are doing. We haven't had the opportunity to get into deeper engagements just because of our focus today. But as the year progresses, maybe Q3, Q4 of the year, or almost like Q4 of the year, we think there could be engagements with the private operator. And eventually, we have good reasons to believe that even on the wireless side, we should start getting some breaks into private operators because they are closely watching all the stuff that we're doing.
Thank you.
Thank you. The next question is from the line of Hiren Kumar Thakurlal Desai, an individual investor. Please go ahead.
Yeah. So first of all, I would like to give a big thanks to Sanjay, who has navigated the ship for 23 years, and I have seen him from those quarters. So big thanks to Sanjay, and I wish him well for the future. And welcome to Anand. One of the question is just a clarification. Last quarter, there was an announcement of we being L1 in one of the BSNL backhaul projects. I just want to get a clarification whether that is same as this 696 crore router order that you announced, or is it a different?
Thanks, Hiren. First of all, thanks for your kind words. Good to talk to you again. Yes, it is the same order. Last quarter, since we had not physically got the order in our hand, but we were declared L1, it was not appropriate for us to specifically call out the customer. But as soon as we got the order, we did announce. Yes, it is the same order, which is the backhaul order for the BSNL Pan India rollout. Yes.
The second thing is, we have been getting reports about the 4G being deployed in a few locations. So is there anything which is sort of holding up the final order, which I'm sure you will announce once you get it?
Yeah, all these things, the way it works is I think we have done everything from our side that needed to be done in terms of commercial, even now demonstrating adequate capacity to produce and time and deliver and roll out, etc., etc. But given the scale size of these things, they do take their time and their own process. We believe those things should come to a fruition soon. I'm reading the same newspapers that you do, and I believe things should happen sooner than later.
Okay. Thanks, and all the best to Sanjay and Anand both. Yeah. Thank you.
Thanks, Hiren.
Thanks, Hiren.
Thank you.
Thank you. The next question is from the line of Vimal Gohil from Alchemy Capital.
Yes, sir. Just one clarification. This is in conjunction with the previous question on the BSNL order. So as per press, this is supposed to be a 26,000 crore order. Would my assumption be correct if I would say that this 696 crore is for a period of one or 1.5 years? Because if you look at the tenure of order, it is an order for about 10 odd years. So of course our project will go on for about 2.5 years or maybe 3 years at least until we sort of supply almost all of the equipment. So this 696 crores will be for the next 1 or 1.5 year, right? Or is it the total order size?
Yeah, no. Let me clarify. There's a little bit of a confusion which might have inadvertently propped in. So the 696 crore order is for our optical products, which is the wireline products, which if you want to think from a simplistic angle, this is the stuff we've been doing for the last many years, right? Except it's of course new technology and all of that stuff. So this is an order which will get executed pretty much in almost in this fiscal year, and some of residue might go into a quarter of next fiscal year, but almost let's say in the next 12 months. So this is one stuff which is different. The other order that you mentioned some numbers and all that, which is for the 4G, which is for the wireless rollout, which is the Pan India rollout. Even that project, a significant part will be rolled out in the next 24. First of all, these are two different projects. So the one which I talked about is a different project. It's a separate deal. It's over. The next one will be the 4G rollout, which will be the Pan India rollout. That would again, once the order comes, has to be completed within a period of 2 years. So in that sense, the the revenue intensity that will grow for the company starting from this fiscal year and next fiscal year, and which is what I alluded to when I mentioned earlier on that I see significant revenue momentum for the next 2 fiscal years, which is this and next year, already in place. So in that sense, a large part of the wireless rollout will also be completed between this and next fiscal year, and that is why I overemphasize in terms of our preparedness of manufacturing capacity, rollout, technology, supply chain, cash flows, because for a company which is just going to have a potentially exponential growth this and next year, we needed to be ready on all accounts. So these are just 2 different projects, and the timeline for execution will be much shorter than what we're thinking. The AMC portion, which is maintenance and support contracts, will run over for many years, include what you said is for 10 years. But the majority of the supplies will be completed for the first order in this year itself, which is the wireline order, and the wireless order also will be completed over a period of 24 months.
Understood, sir. So these are 2 separate orders. The one which you have reported in your press release and the one which has been spoken in the media are 2 separate orders. That's
absolutely.
Understood. Thank you so much.
Thank you. We have the next question from the line of Narasimha Murthy from Cloud Orange Systems. Please go ahead.
Good evening, Sanjay. My question is what's the status of BSNL receivable? Because in one of the interviews some time back you said it would be materialized in the current financial year, 2023. Thank you.
So we have received a significant amount of receivables from BSNL. Venkatesh can dig out the number. But so many of the stuff from older projects which was stuck in receivable actually come during the year. And actually the receivable from BSNL has reduced to quite a bit during the year. So in that sense, whatever we had told earlier has actually happened. Some of the ECL provisioning which has been reversed is on account of the collection that we have made during the fiscal year. So during the year, I would say a lot of the older collections have come in. There's still some residue left, but we are very confident that will come in as well. And again, I think on an overall life cycle basis for the company, our collection track record has been extremely good, and we've hardly had situations where we haven't collected from the customer. So even the BSNL thing, it did take a little bit longer than what we would have ideally liked it to be, but a lot of that collection has come in.
Okay, thank you.
Thank you. The next question is from the line of Yadav, an individual investor. Please go ahead.
Hey, hi. Thanks for taking my question. So my first question is around the margin. So in the call previously, it was told that one of the major reasons why we posted loss was because, few of our contracts were basically fixed contracts, as in the price of input materials went up, but we were not able to pass it on to the customer. So I just want to know the major orders which we are winning now, what kind of contract is it having? Is it a fixed contract or will it be variable?
So the good news is that a lot of the business that once we saw the trend of cost increasing during FY22 and FY23, we, of course, any new bid which we put in or any new rate contract that we signed with a customer was already incorporating the increased cost. In that sense, a lot of the new business that we have won already accounts for the appropriate increase in the component cost. So the confidence that we mentioned so that's one part. The second part was that we also have done a lot of work using our larger buying power, if I were to say, based on the projected volume of business that we see in the next couple of years, to go back to many of our suppliers and renegotiate the pricing to much more competitive levels than we ever got before. So the combination of those 2 things, which is, all the new bids were done at a price where we were comfortable with the margins, and being able to do significant cost reduction in our products to be able to recover the margin that we have potentially lost because of cost increases, gives us confidence that at least in the optical and the wireline business, starting from Q2 onward, we should almost be back to our healthy margin that we were there before. As far as the wireless business again is concerned, when we bid and the price that we have closed with the large order already accounted for the current cost. In that sense, we are quite aware of the cost and even why this cost, but We are also cognizant of the exchange rates that has happened, and we have factored all of that into account while pricing the bid. And this is which we have confidence again that the volumes will be more than compensating with the in terms of the percentage gross margin, so that on the overall basis, I think the EBITDA and PAT will continue to show healthy growth on a year-on-year basis.
Okay, I have one last question. So, out of the order book of 1,900 odd crores, does the Tejas TCS implementation, joint implementation for BSNL 4G, is that also accounted, or is that?
No. So right now, what we count in order book is stuff that we've already received in our books. So this is not stuff that is. So this is not the tender one and all that. There was a very small portion of about 200 sites which we had done through a consortium partner, but that's almost insignificant in the total value of the order. So the order book that we report always is physical POs that we have got, not tenders that we have won or will be likely to win, or rate contracts that continue to give us new business.
Okay, thank you very much. Wishing you a very happy retirement.
Thank you.
Thank you. The next question is from the line of Naveen Bothra from Shubh Labh Research. Please go ahead.
Yeah. Good evening, Sanjay sir. Good evening, Anand sir. Welcome you to Tejas MD and CEO designate. We will miss you very much since you founded the company, and we had a lot of interactions with you. Wish you all the very best. Sir, my question is from the Sankhya side. I would like to have a couple of questions regarding the merger integration status, if you can take that, because we are not hearing much on this side. If you can briefly tell us what is the current status. And from the second, the offerings of Sankhya side, what are the status response we are getting on the D2M side? We are presently doing in India as well as in international markets regarding D2M and ATSC3 technology. If you can talk about the status of all the Sankhya revolutionary products, it will be quite helpful, sir.
Thank you, Naveen. First of all, nice to talk to you again. In terms of the merger status of Sankhya, we've got all the approvals from the stock exchanges, and now we have filed it with SEBI. And I think as soon as we get all the clearances, we will take it to NCLT. So I would say over the next few quarters, likely maybe by the end of this fiscal year or thereabouts, the merger process for the remaining 35% shares will be completed. Coming back to the second question in terms of the focus of Sankhya and how is that business progressing, including D2M, you rightly said that there are three segments which. So I just wanted to call out that a lot of the 5G efforts in terms of the radio work which was happening in Sankhya, that team we have already transferred to Tejas as on 1st October, and in fact part of the Tejas financials already include the additional cost of that team, which is what I mentioned in terms of increasing a lot of the cost for this fiscal year. The second thing is the broadcast business, which is D2M is one part. In India and in US, there are other opportunities that are working on. So the broadcast aspect of 5G, which has a lot of very interesting applications, there is a lot of traction happening. And this financial year, we believe that we should start seeing meaningful revenues from that part of the business of Sankhya as well. Secondly, you also talked about the chip business of Sankhya. So I think Sankhya has applied for the chip development project which is going on in the company as a part of the semiconductor and the CDDS scheme, so that we can also get the support from there. So the broadcast part of the business is going to get into a reasonable revenue stream in this fiscal year. There's a satcom business which is also was smallish last year, but we see some very interesting large opportunities in terms of the satellite IoT product that they have, which should be getting into larger volumes this year. The chip development would be a development effort from an R&D perspective this year, and it will be some time in terms of when it gets into a production in terms of the external revenues, etc. That I would say would be the status of the things in Sankhya. We are excited about all the good work happening there, and of course it was important to realign the resources as well as the direction in the best interest of the combined companies, which is what we've essentially done.
Okay. Thank you very much. Would like to connect again in the AGM.
Almost to the end of the hour, we can take maybe last one or two questions.
Yes, sir.
Thank you, sir.
Thank you.
Thank you. We will take the last question from the line of Godwin S. Fernandez from Hyra Placements. Please go ahead.
Thanks for taking my question. Hello?
Yeah, we can hear you, Godwin.
Yeah, sir, I was looking into the presentation. Your employee count has gone up dramatically high. I just wanted to know what makes you to hire this much of employees on a year to year. Whether you are finding any difficulty for this technology upment, or if you can kindly put up the thought process behind such huge recruitment, that would be nice.
So first of all, Godwin, I must tell you that as a product company today, we are focusing on many different technologies, on the optical transmission technology, on the FTTX technology, and now on the 4G and 5G base stations. And if you look at relatively speaking, and there's a lot of efficiency of execution and how we do things in a very clever way within Tejas, the corresponding global competitors of ours possibly have 10 times our size, if not more. The reason we are able to do a lot more with lot less is because of the way we have defined our architecture in terms of software-defined hardware architecture, where everything is on an incremental basis. We are able to do a lot of design reuse. We are able to really use the same thing in many different forms and shapes. So I think in that sense, the headcount increase, in my mind, is something that will continue to grow and accelerate, because if you're going to be aspiring to become one of the top global OEMs, we have to become top tier in terms of R&D, in terms of new technology investments and so on. So in that sense, I think the hiring will continue, and we will really continue to scale up that. The second part, which I think partly you asked, was also that how do we get such people? And so as a product company, I think we have two streams. We have set up for the entry level or junior level, 0 to 2, 3 years. We have set up something called Tejas Academy, which is, think of it as a boot camp for taking extremely bright people who may or may not have the exact direct relevant exposure into the things we do. But over a period of 3 to 6 months, we give them through a boot camp, which makes sure that when they come out of Tejas Academy, which is an in-house academy, they can really be very productive directly on the project. And in the mid and senior level, I think with the kind of aspirations we have, the kind of success we are seeing, I'm actually very happy to say some of our global competitors are also quite commending the work that Tejas has been able to do in developing new products, get things to scale, get things to global levels in such a short period of time. So we do see there's a lot of, I would say, interest from mid and senior level talent working at least in India in many of our competitor companies to potentially find a way that we can engage. So overall, I would say we are seeing a very interesting funnel of new talent coming into the company. We have now with the revenue scaling up and profitability scaling up, we have the slack available to invest the right amount of dollars or rupees into the R&D effort, so that as a technology company, not only should we increase revenues and profitability in the near term, but also invest to make sure that on a long-term basis, we are really coming out tops in whatever things we do. In that sense, I think manpower is our most important asset, and we'll continue to grow and nurture it.
Thank you very much, sir.
Thank you. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you again. I think we had a very interesting set of questions, and we all summarized it in terms of where the company is today. We have come a long way in the last 23 years. I think companies that in every dimension, I think we have really scaled very good level. The foundation, I believe, is rock solid. We are very well geared up in terms of the exciting opportunities that lie ahead of us. There's a lot of continuity in terms of the team as well as the thought process and the aspirations. And I'm very happy and confident that as I look forward to my retirement, the company is in the best possible shape, and we really do look forward to a very, very exciting times ahead. And again, I want to thank all of you with whom I have interacted many, many times. and we look forward to continued success for our company. And thank you again, and thank you very much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.